Hello ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. Today's date is April 19, 2024. Let's get started. Of course, we know that the Israeli did retaliate against Iran's drone strikes over the weekend with a modest attack on a nuclear facility or close to it in Iran. The Iranians are downplaying the attack, and that is having an impact on the market. We are seeing U.S. stocks now trading modestly into the upside in early trading after the Dow was down over 300 points overnight. We saw the dollar move higher, especially against the euro and the sterling, and down versus the dollar versus yen on risk off or flight to safety type of flows. And in this report, I'm going to take a look at the technicals driving the markets now. Let's start by taking a look at the euro versus US dollar. And if we look at this 4-hour chart, we can see that the price action, well, let's just take a look at the week. It is Friday, has been down and up and down and up and down and now back up in price action. Today, we did see the euro versus US dollar move lower initially off of the strike, but we could not get below the low price for the week. Right near the 106 level, 1.06 level for this currency pair before starting its rebound back to the upside. This swing area right through here was a level of importance this week, and we traded above and below it, as we can see in the chart. But the swing area comes between 1.06557 and 1.0675. In trading yesterday, the price did move above it, but the momentum could not be sustained, and when we started to move back below it, we found willing sellers against the level right here. You can see that on this 4-hour chart, and then our price moved lower off that attack. We've moved back into that swing area right now, and it's going to be a barometer for traders, not only today, but going forward. If we trade above the 1.0675 level, I guess I would be more bullish, and we start to look toward the low price that we saw back here in the month of February. That level comes in at 1.06942. In trading yesterday, the price moved up toward that level, but did find willing sellers against that level. The other level of interest on the top side would be the 38.2% retracement of the this last trend move to the downside from last week's trading. That level comes in at 1.0709. You can't see it, but it's also where the 61.8% retracement of the move up from the October low to this high price in December. That level is also near that level. So it's a dual support level from a retracement standpoint. So be aware of that 1.0709. So 1.06 on the downside, 1.0709, about 109 pips in overall. And in between, we have this swing area with between 1.0655 and 1.0675. Let's next take a look at the dollar versus yen, and I'm going to look at the 1-hour chart in this currency pair. We did get a sharp move to the downside here after the reports of the attack on risk-off sentiment. Stocks were moving sharply lower, and that led to a rise in the yen and a fall in all the yen currency pairs. The move to the downside also fell back below the 38.2% retracement of this move to the upside here. This is the last trend move to the upside, and we did find support against the 38.2% retracement on 2 separate occasions. So moving below that level gave sellers more confidence to push to the downside, and they moved all the way through the 50% retracement level, which should have been more bearish. But as you can see, the price was also approaching the 200-hour moving average. We did find support buyers against that level and quickly rebounded to the upside when reports, I guess, of the strike not being all that harsh, if you will. And we've since moved higher and broken back above the trend line up here. But we are staying below the high price at 154.69 to 154.78. That is capped the pair in trading this week. In trading yesterday, we moved up toward that 69 level, but found willing sellers against it. That was these old highs through here. The high price for the week again came in at 154.78. So on the downside, watch the 100-hour moving average just in the short term here at 154.43. If we stay above that level, then the bias remains more to the upside here for the dollar versus yen. If we move back below that level, we could see some rotation back to the downside. It is a level that traders watch, and it can be a key barometer for either bullish above and bearish below. So be aware, be prepared. By the way, these high levels for the week are the highest levels going back to 1990. So they shouldn't be taken lightly, and the buyers still remain in control. But there is some concern that the 155 level might be a level that the Bank of Japan does not want to see breached. It's just speculation by traders, but also be aware of that they may come in and look to intervene. Finally, let's take a look at the sterling versus US dollar, and we'll look at a 4-hour chart for this currency pair and trading this week. What we've seen is like the euro versus US dollar, lots of ups and downs. We did have a move to the downside after the report of the attack that led to some dollar buying, especially against its currency pair, but we fell short of the 61.8% retracement of this move to the upside, this longer-term move to the upside. So that was a bit disappointing from traders. We also fell short of this low right here before the market moved higher through here. And we've since rotated back to the upside and looked to retest the 50% retracement of the same move to the upside. The level comes in at 1.24646. Yes, we've traded above and below that 50% retracement level this week. We also have this swing area through here, which I've been looking at. That's a bit disappointing from a technical perspective. I guess you can say, and this is my excuse, that the market just is unsure of what it wants to do at this level right now. We saw the sterling versus US dollar exit our value area that we've been looking at for a long time in trading last week, and it's so far maintained that selling pressure. But the 50% seems to be a level that the market is at least consolidating around in up and down trading this week. So that's my look at the three major currency pairs as we head into Friday, last trading day of the week. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.